guys, welcome back to the Independent Investor channel. My name is Ryan, coming to you from New York City, New York. This is going to be military investing, and this is going to be for the thousands, maybe even 10,000s of military members out there looking for some explanation on how to go about approaching investing if you're a military member, all right? Specifically, this is in response to one of my comments. I've been going back and forth for the last couple days with one individual. This is for Brandon. I told him that I would throw down and do a video specifically for his situation. Been in the military 8 years, and he asked me to go ahead and put out a video on his behalf to try to benefit and speak to other members that have been in the military for around the same time, that maybe have not started their TSP account or have not started an individual account on your own, all right? Now, one quick explanation that I owe you guys with regard to military investing, all right, is this is in addition to your guaranteed military pension upon retirement, okay? So if you did nothing and you did 20 years in the military and you retired after 20 years, you're gonna get your military pension, all right? This is in addition to your military pension, all right? But a lot of where the military fails is in their education of young people. There's a real misconception that if you join the military that you don't have any chance of retiring, you know, really quite well off. You do have that opportunity and the security within the military to do additional savings and really put yourself up for success in the future, guys. All right, so this is for Brandon and his specific question. It's really hard sometimes to explain some of the terms that I throw out there. I know a lot of different people are coming from a lot of different experience levels with the stock market. The majority of the people that I talk to in my day-to-day, you know, goings on with people at work, it really lets me in on the fact that a lot of people are deficient in just basic understanding of what programs are out there, what it is that you do with those programs, and can you combine the two programs, all right? So hopefully this video lends some explanation specific to Brandon's situation, but certainly if you guys are in the military and you've been in the military for quite some time, I've already put out a video on the TSP account from a broad perspective. This is going to be a little bit more tailor-made to Brandon's situation in the questions that he's asking me, all right? So this is for you, buddy. I'm throwing down for you and making sure that this communication is coming across correctly and that you're getting all the answers that you need, guys, all right? So this is military investing. And keep in mind, guys, on both of these sides of the triangle here, I do both of these programs, all right? So I can speak in depth about being an active military investor, okay? And the benefits that are provided to military members specifically, okay? Now, when Brandon first reached out to me, he was talking about, should I start one or should I start the other? I don't know, okay? Been in the military, I want to get invested, and this is a common theme for a lot of people who have been in the military, and suddenly it's like, wow, you know, what am I doing? Everybody's talking about investing. How do I get involved? How do I participate? And you just don't know how to go about starting it, okay? And the question was legitimate. Should I start the TSP or should I start the self-managed individual Roth IRA account, which is what I refer to all the time over here on my independent investor program that I talk about all the time on the independent investor channel. And that's for a lot of people out there who are not in the military, all right? So this video speaks specifically to the benefits of being in the military, all right? My answer to you, Brandon, is that you need to do both accounts, all right? You need to do both. When you take these two accounts and you put them together, right, you're going to end up meeting your foundational requirements and you're going to set yourself up in the future for so much more, and you're able to hold a much more diversified portfolio. Let me break this down and tell you what this means, all right? Within your TSP Roth account, all right, they came out with the TSP Roth R option within the TSP not too long ago. It was around 5 or 6 years ago, okay? They've offered this program, all right? Now, when the blended retirement comes online next year, this Roth R option is not going to be available for those folks that are opted into the blended retirement, all right? That's another issue for another day. I just want to put that aside. But this Roth R option is a beautiful option within the TSP to allow you to take a percentage of your paycheck and put those dollars away in an account that are going to grow tax deferred over your military career. What that means is for every dollar that you put away and that dollar is able to grow, okay, it's able to grow in that account. And when you end up retiring out of that account and that TSP is eligible to take that money out, the IRS can't tax you on any of that money. It's free to you to take. If you want to take it all, you can. If you want to take distributions from that account, then you're free to take this money from this Roth R option, okay? That's why I recommend so strongly the Roth R, because it allows you to tax protect dollars, okay? So you absolutely want to start this TSP Roth, all right? Now, just some of the functions within this TSP Roth, what I talked about with you is that you're going to need to pick a percentage of your pay, let's say 5%. That's what I did when I first started. That's a pretty good starting amount. If that's a percentage that you can't see doing without per month, then start with 2 or 3%. There's no problem with that. The important part of this message is to go from nothing to something, to go from a non-investor to an investor. Okay, so the most important thing that you can do within this entire dialogue, and I'm not trying to sell you on starting the account, I'm trying to sell you on understanding why it is that you invest. And the important critical step is to start that account right away. Okay, so get this piece started, get your percentage of your pay. So you're going to need to determine what percentage goes into this account. Within the TSP, you're going to be able to invest with super low fees, all right? But within the TSP, they really limit your choice, okay? Your flexibility within the account. They only give you so many choices. They give you your life cycle funds, and then they give you your individual funds, which is your G fund, your I fund, your C fund, your S fund, and your I fund, okay? So those are the choices within that particular Roth R account over here, okay? So when you get that account started, what I'm going to recommend that those initial contributions are going into the Roth R account into the C fund, okay? So this is going to be your C fund, all right? And again, I've already done a video explaining what the C fund is over here, all right? But what this is going to provide you is a beautiful fund that diversifies you over the S&P 500 index, okay? And you'll understand why it is that I recommend these tax-protected dollars going into this C fund over here on the Roth R side of the house when we start talking about the SMI Roth, okay? So that's this piece over here. You got to get the account started. You got to get your percentage of your paycheck that you determine to go in there. And then you're going to need to go ahead and put those dollars into the C fund. And this requires logging into the account, getting into that account and setting up that allocation for every 2 weeks that you get paid to make sure that your dollars are going into this C fund. It's extremely important that you do this. Once this is all done and you've done the hard work and you've said, Ryan, I don't understand why I'm doing this, but I'm freaking doing it, man. I'm motivated. I trust you. This is what I'm doing. Once you get this started, you really don't have to touch it again for the rest of your life. As a matter of fact, I recommend tinkering with this as little or not at all, okay? Keep the maneuvering within this. You got to keep those dollars within that account working in an up market or a down market, all right? You got to keep these dollars working. And once you get everything done and the dust has settled behind you, you're good. You don't have to mess with this again, all right? So we've got this tier of the triangle complete, okay? So the root of your question is, which one do I do? Do I do one or the other? All right. I've just told you how to get started in this Roth IRA account. You got to get with your servicing personnel department. I'm with the Coast Guard, so I don't know what your servicing personnel, what type of, accessibility that you guys have to financial help, but you need to seek out those resources to help get the proper forms filled out and get this stuff sent in so you can get this stuff set up. Once this is set up, it's good to go. All right. Now let's talk about my favorite account. Okay. Now the reason why we don't do one without the other is really, really simple. Okay. This SMI Roth, the self-managed individual Roth IRA account, this has a contribution limit. Okay. That contribution limit within this account is $5,500 a year. And you're saying, okay, hold on, Ryan, stop. $500,000 or $5,000, that's a lot of money, okay? I'm not gonna be able to do that initially, okay? Remember, I'm setting you up for the future, okay? And if you can do $5,500 in this per year out of your paycheck, which is $458 a month, that's just what it is, all right, then you will have maxed contributed this Roth. Now, if you can't max contribute to this account, let's say you can only do $100 a month, all right? I still want you to start this account and do that $100 to fund this account over here. You do the $100, that's $1,200 a year, all right? That's 25% of your $5,500 benefit, okay? So that's 25% of you tax protecting these dollars over here while you're doing the Roth IRA account, all right? Now, eventually, when you move up in rank and you start to get paid more, a lot of people will tell you take that extra pay and invest it. If you're doing $100 a month over here and you can beef this up to, let's say, $250 a month, all right? Now $250 a month, you're almost at 50% of your $5,500 cap per year, all right? But eventually, guys, I'm setting you up for future success in that I know that eventually you're going to be up to that $458 maximum contribution, and you're going to need a rollover fund to take those additional dollars, okay? And that's when we fall back onto this Roth IRA and we say, okay, we initially started with 3%. I'm now maxing out this account over here at $5,500 per year. Now I can increase my percentage of allocation and continue to tax protect dollars, okay? Now this whole scenario that I just explained, it's only available to military members. It's only available to military members, all right? Regular civilian personnel cannot take and open 2 Roth IRA accounts. You can't do it. You can't go to an Edward Jones and then go to a Fidelity and open 2 accounts. You can't do that, all right? You're only allowed $5,500 in contributions in this account. That's why I have you take this and open this, because once you get max funded over here, okay, then you can take that extra percentage of allocation and start to tax protect dollars over here, okay? Now, the one thing that I didn't mention over here is if you're married, okay, this is just for you single people out there, the $5,500 is for single. If you're married, then you can double that amount and open another SMI Roth for your spouse, okay? All right, now that's another video for another day. I'm gonna leave that alone because then that $5,500 doubles to $11,000 and your max contribution level goes up to 11, okay? That's something that I do. I max contribute both, and I contribute as much percentage to this Roth IRA option over here that I can, okay? Now, why? Why the 2 accounts, okay? The 2 accounts, just as I explained, work in harmony with each other. Remember how I talked about the lack of choices over here in this Roth IRA, the lack of choices here justifies starting this account over here. Because if we've started this C fund over here, we've created that baseline of diversification, that really strong S&P index fund, which is what the C fund is. It'll diversify you across the entire index. Now we take this SMI Roth. Now we start to get into single stock allocation, and I talk about how to build your SMI Roth on a lot of my videos, right? That's when we start to get into buying your Apple, you know, your Procter & Gamble, your Johnson & Johnson, you know, your Citigroup, your really good blue chip stocks, because any well-diversified portfolio that's going to maximize your dollars or make you the most profit in the future, I believe has to have some single stock allocation in there. And it's going to supplement this S&P 500 account beautifully. When you put these two together, it's a powerful account. And quite honestly, it's the best way that I know to tax protect dollars. All right. So with the single stocks in this account, you're good. With the ETFs, you're good. And the index funds and bonds, they can all go under this SMI Roth account. We can build this account, and we have the freedom and flexibility within this account that we do not have with the Roth IRA. So when we put these two accounts, guys, together, we have the entire triangle. Now, what I want to kind of bring home when you put these two pillars to the triangle together is down here to meet three specific goals. All right. Number one, diversification. Okay. Diversification. As a young person, this is going to put you into the flagship fund of the TSP account. All right. It's going to give you that broad-based, low-fee index fund that I think is extremely important for any new investors. All right. We're going to be dollar cost averaging this with your percentage of pay going in and building this account up over time, all right? And then over here on this side, we're gonna have the freedom and flexibility as these accounts grow to start to add some single stock allocation or an ETF or an index fund or a bond account to this over here. I'm probably not gonna do so much of the bond account over here, all right, because I want to maximize my potential within my SMI Roth, and we do have an option on this side for the bond account, all right? So we get diversification when we put these two together. We get tax protection like nobody else out there can enjoy, guys. As a military member, this is your benefit right here to enjoy not only the $18,000 of potential contribution over here, but also the $5,500 over here on the SMI Roth. And finally, the wealth protection piece. In anywhere in this entire video, did you guys hear me talk about going in and talking to a financial planner? No, I've just given you a 20-minute breakdown on how to build an absolutely smashing portfolio for yourself that you guys can put into these accounts and allow them to grow into retirement, guys. It's really just that simple. I would expect that a lot of comments are generated on this really quick breakdown, guys. A lot gets missed in translation when you're trying to message people back and forth. And I think there's a ton of value to me actually bringing some of these topics to a video. That way a lot of different people can kind of benefit from the information and can kind of take that and employ them in their own lives. But if there's something that I've said throughout the course of this military investing breakdown, you guys have got to leave those comments below the video. That way everybody can view those comments and we can all participate and we can all benefit from it going forward. All right, guys, listen, thank you so much. Thank you so much to Brandon for bringing this to my attention. I feel like it was really, really important. I'm helping this individual specifically, and I think this individual can vouch for that. Thank you so much for tuning in. If this is your first time tuning in and you're a military member out there, guys, you need to share this link. You need to employ some of this information, because I feel like the military in and of itself is somewhat deficient in getting this information out to people. And I'm trying to be your voice because I am one. I am a military investor myself, and I'm just trying to help you guys understand this material. It's actually very simple once you get it started. All right, then you can kind of go on with your daily lives and go on with it. But this is stuff that is critical. You have to understand this stuff and you have to employ it, guys. There's no choice. If you're new to the channel, please go ahead and hit the subscribe button for me and help support the channel. This will notify you of any future videos that I come out with. I've mentioned it before. Share this link with any other military members that you have out there, friends, family, that can benefit from this information, guys. Word of mouth is how this channel is going to grow. I feel strongly about that. Please share the link with anybody that you know. Hit the thumbs up button to support this specific video and this specific topic. Thank you so much for tuning in, and good luck in your military investment future. Thank you very much.